All right. All right, let's go, guys. Let's go. Let's do another live stream today because today we are about to get some big data again. Let me remove the banner because stream has started. No, but today we are about to get some big data again. Some very big data. I would even argue one of the biggest data we have gotten in a while because there was no data for the last month or so, right? We did get some data 2 days ago regarding the labor market, regarding jobs data, etc. And it came out a little bit weaker than anticipated. That's not too good, but we have been kind of expecting it because we have been having a look into, for example, these layoffs here. I mean, all of the big companies, they're laying off people, okay? They're not hiring more, they're laying off, and that's not good. It's not good. The labor market isn't looking too strong anymore. Okay, and let's get it over with. Let's talk about it now. I mean, for all of the people that are not in the stream already, they'll not get this alpha hour. They need to rewatch the stream. But I'm about to drop some big alpha here because I mean it will be some big alpha. So yeah, just watch, pay attention, okay? So first of all, we have been seeing these layoffs here, and the labor market has been kind of weak already. We have been having some data 2 days ago, and the thing is, the Fed knows this. They know that everything is starting to look weaker. They know that something needs to be done because otherwise the U.S. economy will go into a recession. And because they have all of the data, they're starting to cut rates, okay? And because they're starting to cut rates and because the data is looking recessionary, well, that has historically meant always a further continuation to the downside. Obviously, rate cuts in that inevitable short term, in like a weekly time or daily time frame, they are good, right? We can see a little bit more of a blow off to the upside, but after that, in the medium time frame, right? So in 6 months' time from now, or 1 year's time from now, rate cuts are not that bullish, especially not if you're getting recessionary rate cuts. It depends on what type of rate cuts you're getting. If you're getting rate cuts into normalization, that's bullish. That is what we have seen during 2024. Last year, 2024, during August, we have seen normalization rate cuts. Okay, the economy was still looking very good. Inflation was still going down. And the labor market was looking very strong. And we saw cuts into normalization. So that was very bullish. However, now we are seeing recessionary rate cuts, and you can go back. I deleted the stock market. Let me close this tab. I deleted the stock market chart, but if you open up the stock market chart, you can always see, historically speaking, whenever you have seen recessionary rate cuts, you've always seen a downturn in the stock market price. Okay, and I mean, the Bitcoin price action is just confluencing with that. Whenever the stock market will go down, Bitcoin will go down with it. Also, by the way, this Fibonacci level of resistance, wow, it's insane, guys. This is the level that I drew much earlier. But no, one scenario that I really like is the 2019 scenario where Bitcoin went to the downside after recessionary rate cuts, right? This was during this period over here. First, it went to the upside, then it went to the downside. I had a look into this scenario extensively as one of the first guys because it just looks so similar with still the stock market going to the upside, US interest rate cuts, quantitative tightening ending, but still Bitcoin went to the downside, and after that we had the big black swan event. Okay, and the reason why it got so big, in my opinion, is because the economy was already worsening, the US interest rates were already getting cut, and after this huge dump and huge crash for the entire markets, well, the huge interest rate cuts were just an excuse to save the markets, and then we had a huge money printing and big bull market, right? So I wouldn't be surprised really to see something similar where, because we're already seeing quite weakening economies, we're seeing weakening labor market, we are seeing interest rate cuts, and probably we're going to be seeing some kind of a downturn in the market already, but nothing like the COVID crash, right? So just something like that to the downside, nothing like the COVID crash. And then out of nowhere, boom, we will get a similar black swan event. I wouldn't be surprised. It doesn't need to play out exactly like that, but I wouldn't be surprised to see something similar. Oh, you can't see it really now anymore. Something similar. And then after that, big recovery again and leading into the next bull market, which will be even bigger. The next bull market will be even bigger than the one we got before. Anyways, I went off to a little bit of a rant off there. This is going to be all very exciting, and I will take you along with me on this whole journey. But the reason why I'm going live right now here today is because today we are about to get some big data. We are about to get the non-farm payrolls and the unemployment rate. And this is pretty much going to be confirming if the labor market is indeed starting to look a lot weaker, which is going to be bearish in my opinion. Now, maybe for the short term, this might be causing a bit of a bump, okay? Because people want weaker labor markets, because people want it, because it will be causing more interest rate cuts, and now the narrative is still interest rate cuts are bullish. So probably if the labor market is going to be looking a bit weaker, so if the unemployment rate is going to be coming in higher than expected, probably for the short term it might be causing a bit of a bump. However, I do not think it's that bullish for the long term. I think these interest rate cuts that we're getting now are very bearish. That's exactly what I've been explaining for the last 3 to 6 months. I've been saying many times, guys, do not get fooled by these interest rate cuts. You need to know the context behind the rate cuts. You need to know why we are seeing these US rate cuts and what it historically has meant. So yeah, if the unemployment rate will be coming in higher than expected, I would say long term it's going to be bearish, but short term expect a bit of a bump. Okay, so yeah, unemployment rate in my personal opinion would be the most important to be having a look into. That's just going to be my prediction, and let me have a look into my phone for 1 second. Also, we will be getting this data in 20 minutes, so yeah, I'll be taking you guys live with it. It's just an important text. And also, let me have a look into the live chat. We have some new people in here in the live stream. Welcome to the stream, and also hello everyone. Wonder how much AI is impacting these layoffs. Yeah, 100%. AI is definitely impacting the stock market, the layoffs by a lot. But UPS, for example, I'm not sure in what category or what field these layoffs are. If it's like in the delivery layoffs, well, I don't know. It's not that AI is going to be replacing your delivery, right? Your delivery packages. I'm not sure about the exact layoffs, if it's getting replaced by AI now. But one thing is for sure, AI is carrying everything, like everything, specifically NVIDIA. NVIDIA, the earnings came out pretty good yesterday, but really, NVIDIA is carrying everything. Maybe, yeah, we're seeing these layoffs because of AI now, but if we have a look into the stock market, if we have a look into NVIDIA, it's really getting carried because of NVIDIA now. What is price of NVIDIA doing now? Let me have a look. Yeah, it's up massively again. It's crazy. It's crazy. But the thing is, it's just such a huge fundamental development which is going on. And I mean, the tech behind it, the use cases of AI, I mean, it's unstoppable. So I get it, but also at the same time, it's a bubble. But nobody knows when it's gonna be bursting. So I would not be betting against it. Okay, this is also what I've said in today's update video. Yes, maybe I'm betting a bit more against Bitcoin in the short term, right? In the short term, I might be because of historical facts, right? But for the stock market, for NVIDIA, I mean, it's just too hard to tell when the bubble is gonna burst, when it's gonna go down. It's too hard. I mean, I don't think anybody will be able to do it. Nobody knows when this bubble is gonna burst, because maybe it is looking like it's gonna be bursting now, but guess what? Maybe tomorrow Nvidia announces another big contract with another big AI company or something like that, right? Maybe something like that will happen, and boom, Nvidia will just go up even more. The Ponzi will just go up even more. So yeah, that's the thing, right? I don't know. I'm not gonna be calling out for tops on Nvidia. I'm not gonna be calling out for tops on the stock market. Yes, it looks overextended. I wouldn't be buying it anymore, but 100% sure it can go up for much longer than most people expect. Just like things can go much lower and for much longer than also many people expect. Because also one thing in a bear market, prices always go much lower, and we will reach extreme fear for much longer than people expect. Uh, Let me have a look into the chat soon, guys. Yeah, so some big data is about to come in. So also, by the way, about the non-farm payrolls, higher than expected would mean that the labor market is still strong, and lower than expected would mean that the labor market is weakening. So the market in the short term, I guess, would like to see lower than expected. And the previous was 22K, and the consensus now is 50K. So potentially we are about to see lower than expected again, which is going to be again bullish for the short term. Maybe like on the hourly candle, right? But in my opinion, for the next few days to the next few months, isn't going to be that bullish. So also look at this trend, by the way. It's insane. It's a huge downtrend. It's a downtrend. That's not good. $4.36K thousand. Thousand. Yeah. So let's have a look into this data. Also, the unemployment rate again, very important. And I think the Fed cares really the most about the labor market now, as it is starting to weaken. I mean, they have been cutting rates already, even though the inflation rate for the US hasn't been getting back to the 2% goal, right? Which they initially set. Of course, right now they are backing off of the idea we need to hit 2%, but that was their initial goal, to go to 10%, 2%, right? So literally clearly shows us that the Fed cares about the labor market now, which is weakening. The Zcash to Bitcoin ratio is going back to 100 to 1. What do you mean about that? What is the Zcash to Bitcoin ratio? Just mean like this chart? I mean like this chart here? What is the chart with the most history? Let me look. Maybe this one. You mean this chart here, going back to 100 to 1? I'm not sure. Like, to be honest, I mentioned it very quickly in my video, but I do think Zcash is looking for a pretty good short anytime soon, potentially. Okay, hitting a massive FIP level of resistance, and also in a short time frame, it might be creating some nice distribution here. Okay, so if we pump above the previous highs and then get back inside of the range here, I do think that this would be a pretty good point to start a short, and I do think we can fall all the way down again. So yeah. I mean, it's pretty crazy. I never thought that I would be saying these things, but I'm literally getting very bearish on the markets now. It's getting pretty crazy because I never thought I would be saying all of these things because I was just bullish throughout the entire bull market over here, right? I've been just only bullish. I still want to be relatively bullish. I mean, lower levels would mean better levels to accumulate at, and ultimately I'm just going to be accumulating more Bitcoin, and I just still expect Bitcoin to go even higher in the long term, and these levels here would be the most bullish things for me that could ever happen. But however, I was bullish throughout the entire trend, and also people that I meet in real life, they say like it's crazy that you're bearish now because you've been bullish throughout the entire trend. I've never seen you being bearish. You've always just been bullish, right? It's crazy for some people to understand. But it's just because previously the trend was bullish. We were in a bull market, and there was no need for me to be bearish at all. And so yeah, it's I mean, that's been the right thing to do, right, throughout the entire bull market. But now people think, wow, this is crazy. This is crazy. People tell me, oh, yeah, you were my daily dose of opium that I needed to remain bullish throughout the entire bull market. And now it's over. And yeah, it's true. But the only kind of opium that I can give is that these lower targets are better opportunities, and we can be like ultimately accumulate more Bitcoin. So ultimately, it's going to be better, right? So it's going to be a gift in disguise. It's going to be a blessing in disguise, right? That's how I look at it. That's how I look at it. I'm going to be super blessed if blessed. I'm going to feel super blessed if I can buy more Bitcoin at these lower levels. I really want to do it. I cannot wait. I cannot wait. It's literally insane. I cannot wait to buy more Bitcoin at the lower levels. But let's see if we can actually do it, right? I mean, yeah, we are trading below that 50 a week, etc. But one thing is going to be for certain: if the bubble is gonna last for longer, well, if we break back above the 50 a week, right? That's going to be an invalidation, big invalidation, and then we can easily just bump even higher. So I mean, that's going to be your bit of opium, right? Break back above the 50 week. Short term is going to be looking quite bullish, in my personal opinion. So we could be seeing a bit of a bounce. Oh, wow. I just see from the WhatsApp group, you can just see that maybe some guys of you know it, but still, even if you don't know him or you don't care about him, it's a pretty big thing. This account just supposedly just got hacked. Carl the Moon Carl, he just got hacked on X. So let me read up on that. Yep. Yep. He's saying now my X account is hacked. Be aware. Please tweet it out. Don't click any links. That's insane. And also his Telegram got hacked. Oh, that's insane, man. So don't click any links of him. He just got hacked. I mean, you can think whatever you you want from him. He's been very bullish. He's been very bullish at the top. But don't click any links, okay? Don't click any links. That's one thing that I want to say. Anyways, in 10 minutes time, we will be getting our data. It will be interesting to have a look into it. But let me turn on a light because it's already getting dark. Man, it's getting dark very quickly right over here. Right over here. It's like 5:20 p.m. already. It's getting winter. It's getting winter. The winter is coming over here. All right, there we go. There we go. Let me turn it off, like a bit less light. There we go. This should be enough. Tell me about it. It's like 4 p.m. and it becomes dark. Yeah, it's insane. I mean, over here where I live, it doesn't feel like winter. It's still pretty warm, but it gets dark so early. It's really depressing. I like these long days we had like a few months ago, right? Obviously, I think everybody does. But right now you start to realize, right, whenever you need to put on a light already at 5:20 p.m. You live alone? Yes, yes. I live alone. I have my own apartment here. But thing is, which is pretty nice, very nice, is all of my friends here in the city, they all live in the same building. So I can just take the elevator, I can just take the lift, and boom, I'm in another room, right, with my friends. So yeah, what is his question? I mean, I think everybody likes the long summer days, of course. Luke is live again, my boy. Let's go, Daniel Fake. Welcome to the stream. Are you gonna be having a look into some data today, man? I mean, in 7 minutes time, we are about to get some important data. I think this is one of the most important data we can have a look into now, because again, I will quickly say it. Yeah, it's 2:23 p.m. Yeah, for me it's 5:23 p.m. Central European time is 22:23 p.m. Indeed, but this data is about to be extremely important because we're seeing these Fed interest rate cuts, right? Which we want for the long term. However, for the medium term, it's not that bullish because the Fed is cutting because we are seeing weakening economy. We are seeing a weakening labor market, and the Fed is noticing that, and because of that, they want to stimulate the economy, but usually they're always too late, and usually always we get a move to the downside after these US interest rate cuts. That's always been happening, and this time I do not think will be any different. That is why I've been selling a lot of my cryptos. I've been saying it many times. But yeah, this data will be very important because if the labor market is still looking a little bit stronger, well, then I would be saying that it's actually good for the markets, and we can maybe potentially have a look into more strength coming in, and maybe then still break into a lengthened cycle. So that would mean if we get a lower unemployment rate as expected, and if we get more non-farm payrolls, that would be good in my personal opinion. Okay, that's my opinion for the medium time frame. But I think still the market is looking a bit different at it. So I try not to be confusing. I'll quickly give a summary later. So I think the market is looking a bit different at it, and that is why I would say that the market actually wants a higher unemployment rate and lower non-farm payrolls, because the market expects more rate cuts after weakening labor market, and the market in the short term is always in favor of more rate cuts. But in the medium time frame, they do not realize that the reason we're getting rate cuts is because of weakening labor market, weakening economy, which is always caused a downturn in markets just a little bit later with a lag. Not instantly, but with a little bit of a lag. So, yeah, to quickly give a summary, I think for the medium time frame, higher unemployment, I think for the market, let's just speak about the market. For the market, we would want, for the short term, a pump. We would want a higher unemployment rate and a lower non-farm payroll. Okay, expected and consensus. Let me quickly grab it. So higher than 4.3% for the unemployment rate and lower than 50K for the non-farm payrolls. That would be bullish for the markets. Very simple. Higher than 4.3, lower than 50K. Now, how can you be getting this data the quickest? Well, that's very easy. Just follow me, for example, on X, and let me quickly say ready for the data. Okay, so I will be posting it over on X, so make sure to follow me over on X, turn on your notifications, and then you will be pretty fast to realize and get the data. On top of that, I would also say follow Financial Juice on X and turn on your notifications. Also, Tree News, and I would suggest you following the most amount of people, so the first one to share it, I mean, you'll have it the first one, right? So get multiple sources. Tree News feed, and then also I would say this one sometimes gets it first. So Walter Bloomberg, this guy, I don't follow him. And then also Zoomer. Zoomer fight. Turn on your notifications, and there you go. There you have it. Follow these guys, and again, I'll just quickly repeat it. The market wants higher than 4.3% and lower than 50K for non-farm payrolls. However, I think that would be bearish for the medium time frame, okay? If we would get that, that's going to be bearish for the medium time frame because, again, labor market, that suggests that labor market indeed is weakening, and a weakening labor market will cause more interest rate cuts. And interest rate cuts in the short term would be good, but in the medium time frame would be bad for the market. Okay, very, very simple. I hope everybody gets it. I hope it doesn't sound too confusing. Let me know in the comments what you think is going to be happening here. I'll wait for you to show me that. You looking fit, bro. I'm right now getting back into shape. Getting back into shape. Just slowly, right? The food I'm consuming now is a lot better, a lot healthier, so that's good, right? It all starts there. And I mean, healthier lifestyle is what I would say. Double bottom at 74K, potentially. If we, starting from the 70K region here, this region from of this low over here, I'm already starting to accumulate more Bitcoin, right? That is the level I start my dollar cost average strategy already quite high, but I just do not want to be left out on any upside gains that Bitcoin can make. Anyways, let's have a look into the data, which we can get any minute. Oh, there we go. We got it. Is it bullish? Trying to get the data now. I'll go to my following tab. Is it bullish? Looks like it. Bullish. Nobody posted it yet. Following tab. Come on, post it. Payrolls minus 6K. Okay. This is not the non-farm payrolls. Average earnings. Oh, non-farm payrolls 119K. Much higher than expected. Which, again, is bullish, right? Like I said. US employment rate, actual 4.4. So also bullish for the short term. And yeah, we are pumping. So yeah, that's exactly happening. Like I just said, we're pumping a bit, not by that much. 0.6. Oh, it's nice. Like I said, like if you're actually on top of all of this data and if you know what to look for, I mean, you saw the continuation over there, right? You could easily just sculpt the data right over there. But yeah, so the actual data came in higher than expected for the unemployment rate and higher than expected for the non-farm payrolls. Actually, by the way, that's a bit weird, isn't it? More unemployment, but also more hired. Okay, we're getting back down again. I mean, usually during around this data, we are seeing just some big volatility, right? Some big wickery, some big wicks. Let's see if we can continue a bit of a pump. I mean, we would deserve it, right? Sitting at the level of support. I mean, it does make sense to see a bit of a bounce back to like this level here, the 100k region, right? I think the 100k region would set up for a pretty nice short. If we can get back above that, maybe 111k. But like I mean, saying it's going to be pretty. It's going to be to be expected, pretty likely to see a bit of a relief rally to a continuation to the downside. Let's see about that. Let's see who does expect that. I mean, people, it sounds very confusing. Many people do not understand it when I'm saying it. But I'll make this thing clear because people think, oh, how are you bearish and bullish at the same time? Like, how does any of this make sense? I mean, I'll quickly clarify, okay? For the short term, I can be expecting a bit of a relief rally, right? Because short-term indicators might be looking pretty good. We are looking pretty oversold in the short term. So I might be expecting a bit of a relief rally. But then in the medium time frame, I've been very, very bearish because we have been hitting cycle tops. We have been, the cycle top indicators, they've all been suggesting and hinting a peak for a long time. I've been getting a lot more bearish. I've been selling off all of my spot, right? But it doesn't make sense because even though I might be selling off all of my spot, I can still be leveraged long in the short term because I might be expecting a bit of a bounce. But then also, even though I might be selling a little bit of a spot over here, of course, in the long term, I want to be super bullish on Bitcoin because it's the greatest asset on earth. So short term, I might be bullish. Medium term, I might be bearish, right? Because the peak and bull market peak indicators are there. But then long term, of course, I'm going to be super bullish because it's the greatest asset on earth, right? So many people do not understand this, but I hope now it makes a bit more sense. I mean, whenever I make these videos and I say, oh, short term, I might be expecting a bit of a relief rally over here, but then long term, we're in a bear market, so I think we will go down even further. People think I'm both bullish and bearish at the same time. That's not true. That's not true. You need to have a look into the context and you need to have a look into what I'm actually saying, right? But I think most of the people that are watching the live stream actually do understand. Most people, I actually do think they do understand. It's just some people, they either they do not understand because they're stupid, or they just don't want to understand. I think it's more that they do not want to understand. Seeing a bit of a pump and dump. Okay. Not much volatility though, not much. I mean, we were not off by that much. Take a position with 1000x leverage for the fun of it. Nah. Maybe later. That would be pretty fun if I would do that with some friends, right? And then maybe later. But that's more kind of bull market vibes, in my opinion. Literally everyone is bearish right now. I think we surprised in coming 3 to 6 months. Two arguments. One, that everybody is bearish, and also we have never spent this much time in extreme fear. And for the first one, that everyone is bearish, some people say that and use that as an argument. But whenever I load up my timeline, can't even do it live. Let's even do it live. Here, most people are bullish. Most people are actually bullish whenever I load up my timeline. Extreme fear. Bullish, right? Bullish. Bullish again. Not too many opinions here. Not too many opinions, but generally, 144k. Okay, bullish, right? Are you ready? Crazy. Yeah, this is what I've been explaining many times. I mean, I also wanted to talk about this. I had a discussion with this, with him, over him, about him, with some friends. And the first thing I wanted to say is I really like the guy. I shouted him out many times. I'm following him. He isn't following me back. I'm not sure what he thinks about me, but I don't really care because I've been following him for quite some time. I've recommended him to many friends of mine to give him a watch. I shared his analysis many times on my YouTube because I really liked his thesis. The one thing I do not like about it, like, there are a few things, right? First thing I want to say is, for example, where's your volume? Wyckoff is not valid, blah blah. But one thing that I've observed with him is that he is saying, right, I'm like, he's sticking to one strategy, and it's a cycle theory strategy, and everything else he just disregards. He doesn't have a look into. Or maybe if it's like really, really, really valid, and if it's really brings a lot of sense of truth, but he doesn't. He's having a hard time in believing other signals other than cycle counts, right? I think that's the first thing I do not like. I always like to have a look into as many opinions and signals and data as possible and aggregate that into my own opinion, and then aggregate like really for my own opinion based on everything I see in the market. That way I do not miss anything, and I am able to make the best proper analysis and aggregated opinion. That's one thing that I don't like. But also the thing, I mean, before, his narrative and thesis was very correct about labor market deteriorating, about Fed rate cuts being bearish. Like, his whole thesis and his whole narrative was very, very correct. It was spot on. He was saying, oh, Q4, the top is gonna be in, and I'm gonna sell. We are gonna be entering a bear market again. But so that's all the things that he's been saying. But now, when the time actually comes there, his whole narrative and his whole thesis played out perfectly. But he didn't sell in Q4. He still had a long position open, and he was just remaining to be very bullish. And he's just trying to fit his narrative, while the market obviously tells differently, and the market obviously has invalidated it. But he still sticks on the long side. He's still trying to be kind of revenge trading, while he was very correct. So, I mean, but still, props to him, man, because of him, I have partially called the top. because of him, because he just explained it very well, what is happening behind the scenes with the labor market, with us already being in a recession if you exclude AI, etc. So still props to him. Because of him, I have called the top. He did not himself, but I did because of his incredible analysis. So thanks to Camel Finance. Thanks to Camel Finance. But yeah, also, we have been having a look into this Wyckoff phases extensively. I've been saying many times beforehand, I want to be waiting for this liquidity grab above the previous high, and that's going to be my top, right? This is what I've been saying. These are the ultimate highs. First, we have seen an ultimate liquidity grab above this one, and I've already said at this high here, this is looking very dangerous. But during that time, I've still been loading up on more positions, right? And I've been saying, oh yeah, probably we're going to be seeing one last leg to the upside. Boom, we got a last leg up to the upside. We saw another liquidity grab, and I've been saying, oh yeah, it's looking so bad. We've got an insane crash, and I was saying, yeah, probably it's going to be over. Probably it's going to be over. And also during this entire time, I've been saying this cycle, we're going to see distribution, which is going to be marking the top, sell your assets. And yeah. That's exactly what we have been seeing. We have been seeing distribution. But anyways, again, that's the original point I wanted to make. More people being bullish. Everyone is kind of bullish that I can see over on X. Everybody is kind of bullish. So that was the initial point. You're saying everyone is bearish now. I do not agree. Because I think everybody is bullish. Everybody I see is pretty much bullish. Everybody. Okay, it's not really that many people are bearish at all. And also, we haven't spent that much time in extreme fear. That's also not true. Because during a bear market, we spend most of our time in extreme fear. We do not really get into greedy zones. We do not really get into neutral territories. We spend our times in the fear zone and the extreme fear zone for a long time. For a very, very, very long time. Much longer than most people anticipate. Much longer than most people expect. This is the thing about bull markets, right? In bull markets, prices tend to rally much higher, and you should be much more greedy than most people expect. But in bear markets, prices will always go much lower than everybody expects, and we spend our times in extreme fear for much longer than everybody expects. So, yeah. Yeah, we are extreme fear below 20. Maybe this wasn't extreme fear below 20, but it's the general thing, right? And also, I'm not sure how reliable the exact number on this calculation is. Because I think it's just a guy behind it. Putting in a number every day based on some metrics. I do not think it's like an AI or a systematic software. I'm not sure about that, but always be careful. Do your research about that actually yourself, right? So, Scam Lee said Ethereum is going to 100K by the end of the year. I mean, it was a great narrative that he pointed, and I really did believe Ethereum could have higher. I really did. It's very unfortunate. I mean, it's... I talked about this also last time with one friend of mine. I literally said, you have this chart here, right? And you had just one small liquidity grab above the previous ultimate. Just one small one. That was just it. That was all we got. It was all we got, a small liquidity grab above, and after that, boom, just down. But nobody expected this. Obviously, maybe in hindsight, after created an arguably distribution here, we broke down below. Obviously, maybe in hindsight, it was like, okay, yeah, but nobody really shorted this breakout here and is still in this position. Nobody really expected this, right? Nobody. And Also, if you go back in time, if you were at the bear market lows or like this accumulation range here, right? And you asked people, what is going to be your Ethereum price prediction for this cycle? Literally nobody would have told you just $10 above the previous Altamaya liquidity grab and then it's over for the cycle. I think 0 people literally would have expected that. Like actually believed in that at these major lows here. It's crazy what has happened for Ethereum, but it still happened, right? The most crazy scenarios usually do play out, and it played out for Ethereum. That's crazy. But yeah, he has said that Ethereum is going to go to 100k. Now, I do think that Ethereum could be a bit outperforming, but let's see about that. Historically speaking, in December, Ethereum has been outperforming against Bitcoin. If we do still break this downtrend here, I do still think that Ethereum can pull a leg to the upside, but let's see about that. It's going to be interesting. Maybe a trade we can take. Too bullish. I've seen we have 2 camps. First one believes in 4-year cycle and think it's over. The other camps say we will continue into 2026. Where are you? I'm kind of in the middle, right? Because there are 2 camps. Like, I do not want to place myself in one camp. I think that's absolutely stupid. For now, I always say follow history. And I'll go with history until proven otherwise, right? I want to go with history. Historically speaking, we have entered this bear market, so it would be stupid to say, oh yeah, this time it's going to be different, right? I would be open for the scenario for this time to be different, but right now we didn't get any reasoning, we didn't get any proof, we didn't get any data, we didn't get any charts telling us that this time indeed will be different. So up until that point, I will still have a look into history and I will still have a look into the 4-year cycle. But it can easily get invalidated if we break back above the 50 weekly moving average. That is my invalidation where I will say, yeah, maybe this time around we are indeed going to be seeing a lengthened cycle. And this time around maybe we are going to be seeing some kind of a super cycle. And this time around might be completely different. The 4-year cycle might be completely over. That is going to be the point if we break back above the 50 weekly moving average. But that is not happening yet right now. So I would still rather have a look into history, because more often than not, history actually plays out, or not exactly, but it certainly rhymes, right? So I'm kind of in the middle. I still do believe in the 4-year cycle. I would still lean more into the 4-year cycle theory, but I just want you to know that you need to have proper invalidation points that you want to flip very quickly if the tides turn. Have you seen the Merlin the Trader channel? Seems reasonable guy. Yes, he's a friend of mine. I know him also. He's from the same hometown as me in the Netherlands. And also he's living in Dubai. So that's pretty nice. He's one of the friends here in Dubai. So yeah, they know each other. He is a good guy. Top is not in. Let's see about that. I would be open for that scenario. If we break back above the 50-week moving average, then I would agree with top is not in. But right now, I'm not sure. Let's see about that. 1000x short position. Well, the thing is about shorting. Shorting is kind of stupid. Longing is always kind of good. Even in this scenario here, where we're currently sitting at, I would still be rather long than short, even though I expect lower prices. I think shorting is very stupid. Maybe only on the ultimate very good opportunity you would get, best opportunity, then shorting might be okay. But shorting generally is very, very stupid. Shorting generally is very stupid. Why? Because the risk to reward is just not in your favor. Maybe if you're trading on a 4-hour or 1-hour time frame, it doesn't really matter that much. But if you just go, first of all, let's talk about this argument. On a weekly time frame, right? The potential downside for a short would be maybe minus 50%, maybe from the current levels as well, minus 50%. Maybe that's your potential biggest upside, right? But the risk you're taking is very high, because if you take a 10% leverage position, you only need 10% up, right, to 100K to get invalidated and to get liquidated, right? So the risk is way higher, and the reward is much lower, right? A minus 50% move, and it takes a very high amount of courage to hold on to a position of a minus 50% move. But you can easily get invalidated with a 10% move. So risk to reward there, it's already bad. It's already very bad. Now, of course, if you go to a 1 hour time frame, it doesn't really matter that much, because still you can take this move over here. It's a minus 4% move or a 2% move. So it's getting better on the lower time frames. But on the high time frames, you cannot only go down minus 100%, but on the upside, you can go up unlimited percent, right? So the risk to reward is always much better on the long side if you're long. And then also, on top of that, so that's a first argument. Risk to reward is always much better on the long side, on the higher time frame, right? On the shorter time frames, it doesn't matter that much anymore. But on the higher time frames, it's always much better. That's the first argument. Now, a second argument would be that in the long term, Bitcoin anyways always will go up, right? It has always gone up in the long term. So if you just stick to being long on a high enough time frame, eventually you'll be right. Eventually you'll catch a bottom. And eventually you'll see a move like that being created to the upside, and it will break even on all of your losses, right? It's a 700% move to the upside. It's an 8x. Right, while on the short side, you can only get a minus 100% move. A 2x. Excluding leverage, right? So, and in the long term, it's always going to go up. I mean, these are the two arguments. Risk to reward is much better on the long side, much worse on the short side. In a long enough time frame. In long term, Bitcoin is always going to go up anyways. So, that's the thing. So keep it. Also, we have 92 people in the live stream. I will have a look into some more live chats a bit later. But first of all, this afternoon I've been doing some research, and I just wanted to share it with you guys because you guys deserve some alpha. First of all, MicroStrategy, I think it looks pretty nice here. It's starting to look pretty nice because MicroStrategy has already seen a correction of minus 65%, right? Which is quite big. Bitcoin only has seen a correction of minus 30%, but MicroStrategy already minus 65%. Now also, MicroStrategy last bear market has done a 90% move to the downside. So if we would do the same thing again, that would set MicroStrategy at the $55 mark. But I do think that it's better to have a look into time for MicroStrategy. So starting from Q1 next year or beginning of Q2 of next year, I think would be a good moment to start accumulating MicroStrategy already. Because I think MicroStrategy will provide better returns than Bitcoin will. Last bull market, we have seen literally a 60x almost. Right? Is that correct? Didn't see 60x. Went from $13. Oh yeah, we have seen about a 30x. It's about a 30x. I thought it was like a 12x. This bull market, it was a lot less. All right, so insane returns. But if MicroStrategy would drop all the way back to the lows here. And if we would get off the fear, people selling off because the Sailor Tracker, because the AMNAV, etc., I think this stock will sell off like crazy back into maybe potentially the $50 mark. And that would be during this blue zone, this blue box here. And this would be my level of accumulation. And then next cycle again, I think it can see a big move to the upside again as Bitcoin will start to go above their average buy and back into a bull market. I think MicroStrategy will provide bigger returns than Bitcoin will in the next bull market. So I think MicroStrategy or strategy will be a very good stock to accumulate during the next bear market. And also, as the Bitcoin price will go down and down more, people will think, is MicroStrategy going to get liquidated? People will have these fears. News stories are going to come out. And it will just suppress the strategy price lower, which will be providing for a better buying opportunity because they will not get liquidated. I don't think so. Bitcoin price would need to fall down below the $20K US dollar level, and then discussions will open up for a liquidation. But I don't think Bitcoin will fall down below the 20K level. Yeah, indeed. If MicroStrategy will become insolvent and if they will get liquidated, well, it will cause a big crash on Bitcoin. And for Bitcoin, that's 100% guaranteed going to mark a bottom. Yes. I do agree with that. But yeah, MicroStrategy, I think it will be a big, good buy during 2026 and during the beginning of 2027. And the thing is about MicroStrategy, you have a lot more time to accumulate because it tends to consolidate a lot longer at lower levels than Bitcoin will. Right, this wasn't that big of a rally. It was 130% of a rally, and if you accumulated over here at this point here, you still would have realized a very nice rally of a 16x, right? While you were still later to the party. So that's my strategy. I've marked in my calendar this date, the 1st of February in 2027, to have a look into MicroStrategy. Okay. And also, I'll be having a look into this blue box over here for accumulation. So let's see about that. Anyways, I'll be updating you about that in real time if we do reach these levels. Now, MicroStrategy is an interesting one. I think also Coin is an interesting one. Let's see about that if something like this will play out, yes or no. Because if we compare, for example, Coin to Amazon, well, Amazon just went up in a straight line, right? It had some mini bear markets, but general trend has always been up. So let's see if a stock like Coin is going to be doing something similar, or is going to be following this crypto market cycles a lot better with crypto. Yeah, no, let's see about that. But for Coin, yeah, this is going to be about my level. I want to accumulate at these lows here, starting from the $150 to the $70 mark. I would be interested in buying more Coinbase stock at these levels. Also, like for example, Robinhood, it's been insane the rally here, but I think Robinhood will follow a lot better of a trajectory to the upside. Maybe see a bear market. Still will go a lot better to the upside. What else? What am I missing? I'm thinking about one thing. Nah, that's kind of it. I think so. Anyways, let's have a look into some chats. Don't be like that. What do you mean? Why has poop parties? I don't know where you go to. I'm not sure about that. Maybe it's been in the news one time. But I'm sure that in any big city that you might be in, similar stuff is happening. Can you just bear in mind, everyone said this cycle will reach 200k, not 120k. It's not true. It's not true. I've said in many of my videos and many of my live streams that my target has been between the 110k to the 140k level. That has been my level I intended to sell at when I set my targets at the previous bear market bottom. Okay, I've said it many times, many times. Always set your bull market targets at the bear market lows, because over here you do not act out of a place of euphoria. You do not act out of a place of greed. You act out of a place of fear. You still have the fear of the bear market. So set your bull market targets here at the lows. And my targets over here have been sitting between 110 to the 140k level. I've said this many times and I've sticked to it. I've said these are going to be the levels I think we're going to be topping out at the bear market lows. Now, even during these times, I've also said the 80k level, we could potentially reach that, and I will already be starting to sell a bit of that level. Now, honestly, I did not. I waited. I was dumb, okay, because you should always listen to your strategy you picked up, but in hindsight, it's played out pretty well. But that's the thing. You should always set your levels up beforehand. You should always set up your strategy beforehand. For bull market targets, set your targets at the bear market lows. You're not acting out of a place of greed. You're acting out of a place of fear. That's much better. And just like the same, like set your bear market strategy now. Do it now. Okay, if you do believe we're gonna head lower, already set your targets, already set up your game plan now, because you're not acting out of a place of fear, which you will inevitably have later down the line if we're gonna be crashing down below the 200 weekly moving average. I guarantee you, news stories, like crazy news stories, will come out and you will have fear. You will have fear. So set up your game plan now, because now you're acting out of a place of greed, not out of fear. So now if you set up a game plan, you will say, at these levels here, I will do everything I possibly can to buy more Bitcoin. But once we eventually reach these levels and you didn't do this, probably you're going to guess yourself. You're going to think twice. You're going to second guess yourself, and you're going to think, maybe Bitcoin wasn't actually a good investment. Maybe I should sell everything. And that is how you get wrecked. Okay? Set up your strategy now. Think about it now. That is one thing I can say already, because during these bear market bottoms, I've set my bull market targets. They exactly played out. Okay, during these bull market tops, I've set my bear market low targets. They exactly played out. During the beginning stages of this bull market, I have set the targets for this bull market. They exactly played out. Now, at the time over here, I was kind of blind, because I was having a look into all of these signals in real time. I was calling out for tops. I was selling a lot, but I only sold about 70% of my portfolio. The extra 30%, I was like, oh yeah, I'm just gonna keep it, because quite honestly, you were having a lot of euphoria. You were having a lot of greed at these levels. So I was still hopeful that we were gonna go up even higher. But that was a bad mistake. Okay, I should have listened to my initial targets, right? You should always listen to your initial targets. And I've made my initial targets right now already above the 200 weekly moving average, starting from the 70k region, 70 or 80k region already. I'll already start to dollar cost average slowly into Bitcoin, but below the 200 weekly moving average, really heading lower and lower. The lower we will go to the blue zone. I will do more and more to buy more Bitcoin. I will do everything I can to buy more Bitcoin. I will open up leverage positions. I will sell everything I have to just buy more Bitcoin at these lower levels over here. So that has been my strategy, and I do think it's wise and good to already set up your strategy now. Just like I have said, during bear market lows, set your bull market peak targets, and during bull market peaks, set your bear market low targets, okay? Because now you're acting out of a place of greed. That's a very easy thing to understand and very important to keep in mind. Very, very, very important. Anyways, I also do quickly want to mention to you guys that if you like free money, check out this link over here, the second link. The only thing you need to do is click on the link, then open the 2-bit page. We're dumping in the shorter time frame. Open the 2-bit page, sign up an account, no deposit, no KYC is required, and there will be a free 30 USDT deposited into your account, which is quite lovely, absolutely insane. This campaign that 2-bit is running is kind of insane. Also, if you're depositing a little bit, for example, if you deposit 1K, you're going to be getting a free 200 USDT instantly deposited into your account. And if you're trading over on 2-bit, which is a great exchange, then you can also be claiming some huge bonuses. I'm actually going to be getting interested in potentially opening up a position on 2-bit soon. Now, I either want to have a look into a bit lower targets for me, for a long position, going back to these highs here, or I want to just wait for these highs and then short it. But let's see about that. I think it will become clear in the next few days which one of these two scenarios it will be. So let's see about that. It will definitely be exciting. And by the way, if you're interested in trading or my private group, if you want to stay up to date, join the private group with the first link down below. Okay. I know I've said it in the past, but I'll say it again here. Right now, I'm actively working on more functions to add into the private group. Like, should I say it or nah? I'm gonna keep it a secret. But you can already join now, and it will be very nice. It will be very nice. I can promise you. It seems like everyone is saying their strategy is to buy at the 50 to 70k range. Do you think the market allows everyone to accumulate at this range? I mean, it will not be easy. You might think it is easy. Now, you might think it is easy in hindsight. But let me tell you about how hard it actually is to pull the trigger to actually buy while everyone is scared AF, while everyone thinks we're going to be headed much lower AF, while we are dumping down below the 200 weekly moving average, while your daily news stories you hear about Bitcoin and crypto is that it's dead, and that here a company went bankrupt, that there a company went bankrupt, that here a hack happened, that there this happened, that a war broke out, that this doesn't recover, that doesn't recover. If you have all of these fearful, bearish stories coming out every day, let me tell you how hard it actually is to pull the buy button. Many people will be scared AF and scare away. Many people will say, oh, 50k, I'm gonna buy at 50k. Then we approach 50k, and they're gonna say, we're just gonna be headed a bit lower, 40k. It's gonna be 40k. Then we approach 40k. Then people say, 30k. It's going to be 30k. Then we approach 30k. They do not hit that buy button, okay? And then they're going to say 20k. But then, no, Bitcoin just goes up and 30k was the bottom and they didn't buy in and then they'll get left behind. I mean, there's many such things that can happen that will fool people. Also, fake rallies. For example, if we fake rally here, for example, right? If we create price action like this, we fake rally here. Many people think, I missed the bottom. They're going to buy in again here. And then we dump. Right? They panic sell again. And then we bump a bit. They think, now I'm going to wait for the dump. I'm going to wait for, 25k. Just hypothetically, right? Hypothetically. And then we just set a double bottom, and then we pump, and they miss out on this entry here. They miss out because they were too greedy because of this mistake here, right? and then they pump, and then they still missed out, right? There's many such things that can happen. People can also just get wrecked on the way down. If they buy, if they sell here, then they buy here again. They think we're headed for a bull market again. Then they sell again here, but they buy again here. I mean, of course, in hindsight, it will look very easy for you to just buy here, sell here. But at the time, it's very difficult to actually stick to a strategy like that and actually pull the trigger. Anyways, let me have a look. All right, guys. I do need to head out right now. I'm already too late. I'm sorry but I just shared so much alpha, so it's okay. It's okay. Also, last thing I want to say is that if you're still involved in the crypto market, please do not lose focus. Okay, maybe best case scenario, we still recover and we still get above 50 week and it's all good, happy days, right? We're still going to be headed higher. Okay, maybe best case scenario, but in worst case scenario, if we fall down below and maybe even go to 20k, worst case scenario, please do not lose focus. Do not exit the crypto market. Do not think it's over. Do not think it's nothing for you, because these are the periods during these downturns in the market. These are the periods where the real wealth is made, where the real knowledge is being learned, where you're really gonna make it. Maybe it will not be shown during this downturn, but it will be shown in the next upturn. So if you experience the downturn, you will experience the upturn, and it will be 100 times greater than the downturn. Okay, you cannot not experience the downturn, but experience the upturn and turn out very great. You must experience the downturn in order to experience a great upturn. You need to go through it. You need to be involved in the market daily. You need to still adapt. You need to still learn every day. You need to be active, and you need to be here. And if you leave here, I mean, you'll for sure not make it. Okay, you'll for sure not make it. Anyways, that's a very important note. And also, again, closing off the stream, if you're interested in trading, make sure to check out the offer from 2bit, because it's absolutely insane. No exchange is giving out this much free money. Also, they're having cheap trading fees, and I'm gonna open my next trade over on 2bit. So make sure to check that one out over on 2bit. And guys, with that being said, this was it for me. Today's live stream, it was a great one. And I'll see you guys in another update video tomorrow.